What's up YouTube? My name's Shane. This is Mind Beyond Money. Today we're looking a little bit into GameStop and how it's driving new investors towards the market and what you should do if you are a new investor. So as most of you know, the whole GameStop story is blown up. It's over every headline, it's on every news station. It's just crazy right now. And it should be. It's being taken very seriously on both sides. I think a lot of people feel this is more of a battle against rich and poor or rich and middle class, and that's fair. But today I'm going to be talking a little bit more about what you should do as a new investor coming into the market and not getting suckered into what's going on in a particular stock like GameStop. So first of all, it's very understandable that people have been more drawn into the market given, all the news surrounding GameStop. It's up over 18,000% off its highs, or at least it was earlier this week. So it's no surprise that people are like, how do I get some of that, right? You're on Wall Street Bets on Reddit and you see people with millions of dollars worth of returns, and you really got to take yourself back before you actually start putting money in the market. Now, if you wanted to go and support the cause more than, invest in GameStop and, do the class warfare thing, that's all on you. But if you're really actually interested in investing, there's a few tips I'd like to share with you. I've been investing for about 3 years now, and there's been a lot of ups and downs in that time. I've learned a lot, and just a few things that I'd suggest for any new beginner investors. So, number one, we got strategize and plan. So this basically means that you have goals in mind and be realistic with those goals. A 20% return every year over a long period of time is very, very hard to do. So don't be unrealistic saying you're going to get 1,000% returns every year, okay? So that's the first thing. What is your end goal? Are you trying to build a retirement account? Are you trying to just make a little bit of extra money? Are you just having fun in the market? There's a whole lot of different things. Are you trying to replace your income with dividend income? Lots of things to look over. So read as much as you can up on that and build yourself a good solid plan. Number two, we got starting small. So what I mean by that is, say you're just a really good saver and you have like $50,000 saved. You're doing awesome. That's great. I don't want to see somebody take $50,000 out of savings who's never invested before and then put it in the stock market and lose it all because they're just being too aggressive or not learning enough before they put money in. That can easily happen. So what I mean by starting small is just start with something small, and then number three is also start simple. So don't go picking the hottest stock right now or chasing penny stocks, anything like that. Just pick a ETF or like maybe a blue chip dividend stock, something simple that's lower risk. Get yourself acquainted with the stock market. Learn how it works a little bit better. Learn, fundamentals, technicals, a few things before you start chasing a bunch of different things. And just keep it super simple. I would just suggest just a S&P 500 ETF to start, and then probably build off with a couple of blue chip dividend stocks. And what I mean by that are very large companies that are household brands kind of, and they pay a good dividend, which is a distribution every month or every quarter. Most of them pay every quarter, not every month. So for those, think of things like maybe Clorox or Coca-Cola, McDonald's, things like that you see everywhere. Maybe big box stores that you go to all the time, like a Lowe's or Home Depot. Probably stick away from, the smaller retailers that are more niche because they're getting hammered with COVID right now. Yeah, and just try and stick with something that's kind of like a consumer cyclical. Number four, be prepared for volatile markets. The markets are a big roller coaster at times. Volatility is fairly high right now and we're sitting close to peak levels. So keep that in mind when you're going into the stock market. Be prepared to see losses and see reds in your account. Probably it's not unheard of as a new investor who is starting right now. Like, I can't imagine how that would be right now. Everything is all over the place. There's stocks doing 20, 30, 40% gains in each direction, gains and losses. So just be prepared for that, and keeping it simple and small will help mitigate that risk of seeing too much activity in your early days as an investor. Number 5, We got be patient. It takes a long time to build wealth, and it takes a long time to actually see good returns, learn how the market works, make better decisions. All of it comes with time. I'm only 3 years into it, and it feels like I have so much to learn yet, and there's so much more that I can do. I feel like I've made a lot of mistakes. Those are going to come with time as well. And you're just going to grow as an investor once you start making those mistakes and learning from them. Biggest key there being learning from your mistakes and being patient and not losing hope that you're not going to do well as an investor, because everybody, I feel, can do well. And that brings us to our last point, number 6, and that is to learn and read as much as possible. As much information as you can gather about the markets or a specific stock that you are thinking about going into, the better. Honestly, the more information you can digest in a day, the better you're going to do at investing, and that's definitely the key to it. Well, that about wraps it up for today's video, guys. I hope you enjoyed. Make sure to like and subscribe if you haven't already. We'll catch you in the next video.